Hi, yes, students, how are you doing? Now, moving on to the topic on investment. Last week we touched, or should I say, 2 weeks ago we touched on, the importance of diversifying our savings because savings actually doesn't really give us very good returns because most of the time savings doesn't cover inflation rate. So that's the reason why we should be looking for alternatives that could help us uh, gain more value in the money rather than putting them in the bank. So today we will talk a little bit more about investment. So what is investment? Why do we invest in shares? Oh, like what I shared with you last session, there are many ways that we can invest. Some of your parents do invest properties. Some of your parents put their money in bonds. Some are into the shares market. So today we'll focus more on shares. So why invest in shares? If with proper research into companies before investment, you may make your money grow when the share's price increase in its value. Okay, I'll show you some examples on how the value of shares could increase, and of course it's vice versa. The shares price can also drop if you do not do sufficient research. So you can also get dividends, okay? Because whenever you invest in the in the shares market, you're basically buying a part of the company. So whenever the company does well, the company will give you some money as being loyal to them. So that's when you get a dividend. Sometimes it is paid every 3 months. Sometimes it's paid every 6 months. Sometimes it's just once a year. So it really depends on the company that you're investing in. And you should, and I want to remind everyone again, in the future when you start earning money, you should only invest using spare cash. Those money that you know that will be kept in the bank and you will not need to use it urgently. Okay, and that's the type of money that you can invest, and never uh, use those money that requires for your daily expenses like food, transportation, school fees for your children, or money for your mortgages. You never touch those money. Those are the must have in the bank so that you can pay off to the various companies, for whatever reason. Okay, do take note of that. So I'm going to show you a short video to let you know more about shares. Okay, just pay attention.
Stocks Made Easy, presented by WallStreetSurvivor.com. This is Julie. She lives in Paris. Julie is known for her delicious croissants. She started baking when she was a little girl, and ever since it has been her dream to open a bakery of her very own and supply the city with her wonderful croissants. She figures that it will cost her $100,000 to start her business with all of the supplies, staff, and costs of starting a business. The problem is Julie only has $10,000 to put into her company. She definitely can't build her business properly on $10,000. What is Julie to do? Julie decides to issue stock to investors to help raise money. Stocks are pieces or shares of ownership of a company. Each share is worth a certain amount based on what the company is worth. Companies issue shares to investors in order to raise money. Because she is $90,000 short, Julie decides to get 9 of her friends to invest in the remaining balance. However, to do this, Julie must give up 90% of her company in shares. Now Julie and her friends each own 10% of her company. 5 years later, Julie's bakery is booming. She has turned her bakery into one of the biggest in Paris. Her company is now worth $1 million. Julie got the money she needed to create her business without acquiring additional risk or debt. Also, Julie and her 9 friends each turned their $10,000 investment into $100,000. Just like Julie's friends bought shares in her company, you can also buy shares of publicly traded companies like Apple or Walmart. If Apple has 100 shares and you bought 1 share, you would own 1% of Apple. To learn more about the stock market, sign up at wallstreetsurvivor.com and play the web's biggest fantasy stock market simulator.
So I hope you have a better understanding of what shares is all about. Basically, you buy a part of the company when you purchase a certain amount of shares from the shares market. So I'll use Qantas as a good example, on whether investing shares is a good thing. Again, like I say, is something that you need to decide on it in the future. Like I say, there's no best way in investment. There are ups and downs, even if you buy properties. Okay, for example, at the start of the COVID-19 in Australia, the share market actually had a crash. It was quite a bad one, as you can see even from the diagram here. Okay, there's actually a very big dip in the price. Just over a month or so, the price has actually dropped significantly for Qantas. So there are a few things that I want you to take note. Okay, for example, the date whereby the share price was the lowest, it actually happened on the 19th of March. And I collected this data on the 24th of April, which was $3.39. So imagine, if you are such a good share market researcher and you discover that, by the 19th of March, the share price of Qantas will be the lowest, and you decide to put in $10,000. This is what's going to happen, okay? So the price of Qantas shares was on the 19th of March is $2.14. On the 24th of April is was $3.39. So imagine just over a month, slightly more than a month, the share price has actually gained in $1.25. It's a very, very good positive gain. Okay, so if you are such a wonderful investor and you see the opportunity and you go in with $10,000, okay, just based on the simple calculation without any fee to the broker firm. So the $10,000 that you have invested, because it has actually increased in certain percentage of the original share price, which is $1.25 out of $2.14, add on to the value, the original value of shares that you have invested. From $10,000, you have the share value has actually gone up to $15,841. Or imagine just over a month, by just putting $10,000 in Qantas shares, the value has gone up more than 50%. That's remarkable. Not some of us may not even be able to earn $5,800 in a month. Okay, so if you have done that, or any investor have done that, they would have earned a lot of money during just this 1 month alone. I did mention earlier on, what happens if you buy at the wrong time? Okay, I look at the shares market of Qantas again, and the highest value for Qantas happened on December 19, 2019, and the value was $7.40. Imagine, at that point in time, it was so expensive just a few months ago. And on the 24th of April, it was $3.39. So imagine if you bought at the highest point, $7.40, and you decided to sell on the 24th of April, it has gone down to $3.39. The price has actually decreased by $4.01. That's a big decrease. Okay, imagine you have invested $10,000 on Qantas shares on 19th of December. At this moment, it is only worth $4,581 because the share price has gone down significantly. Therefore, it's still coming back to the same point again. Whenever you want to invest, you need to spend time to do research and make sure you buy at the right time. Okay, because once you go in at the wrong time, you will lose a lot of money. And another reminder, it should be only using spare cash and not money that you need for your daily expenses. Okay, the other thing that I want to talk about is on dividend. Okay, what are dividend? Okay, so dividend is a sum of money that will be paid up to the shareholders. If you keep the shares for more than a year, you will be paid a sum of money for being loyal to the company. So it's usually out of the company's profit. I did a research on Australian companies and which companies actually give you the best dividend. Okay, so these are the companies that give very good dividends. Okay, Fortescue Metals Group, they are into raw materials, iron ore. They sell a lot of materials to different countries, and I believe the biggest purchases are from China. So on a yearly basis, the investment dividend is 20.62%. Some of you actually did the research on savings, isn't it? I think the highest was about 1.8%. Compare a bank interest of 1.8% compared to a company like Fortescue, is 20.62%. It's much higher. So let me do a simple calculation for you. Okay, imagine again you invest 10,000 in Fortescue Metals for a year, and after a year you get an interest of 20.62%. That would mean even without selling the shares, from the 10,000, the value of your shares will become $12,062. Most people will take out that $2,062 for whatever purpose. Sometimes people will use that money and put it back into the shares market to allow it to regenerate. And when you do many times repeatedly, your money will actually grow to a much bigger pool. And when that happens, whatever interest that you can get from your shares from the shares dividend, if it's equal to the amount of money that you're earning, that would mean you have achieved financial freedom. In other words, the shares market dividend is able to even pay you like what you are earning outside working. Okay, something that again we will touch on in the future. So I hope you enjoyed the lesson. Thank you.